All right, boys and girls, how we doing out there? Doc Severson with you here at ReadySetCrypto, doing our webinar series, weekly webinar series, coming to you today from beautiful, sunny Greenville, South Carolina, United States of America. I'd like to know where you guys are coming in from today, joining us here on the webinar. We got a bunch of people on board, which is great to see. Welcome aboard, everybody. And another fun day of risk assets in decline. All right. Good morning, everybody. Good afternoon. Good evening. Good to see you on board here. Okay. So, assuming you guys can hear me. All right. Looks good. Where's everybody coming in from? Well, while we'll do that, I'll just keep on flicking the slides here. We're not going to be talking about any basic trades today. All right, so we got Utah, we got Vegas, we have New Jersey, we have Southwest Ontario. Welcome aboard. Glad to have you with us. And we have Nolans. Awesome. That's great to see. Newport Beach, Louisiana. Mainz, Germany. Toronto, Austria. Fantastic. All right. Good to see you guys. Thanks for joining me today. We're going to be talking markets here. We'll probably be going about 20 minutes or so, and then we'll get to Q&A. We got another Toronto. You guys need to get together. We got Miami Beach. We got Arizona, Turkey. We got Watford, London. We've got two Londons here. London. Favorite town, Long Island, New York. All right. What else we got going on here? All right. So I am going to switch over here to the left-hand corner and get started with some of our slides here today. No live trading today. So this is our One BTC Club webinar series to help you accumulate as much as possible on that. All right, Coventry, lovely. Another London, Boston, Massachusetts. Okay, so we structure these. Typically, we're picking one of the topics around our pyramid here, Introduction to Technical Analysis, Short-Term Trading Strategies, Fractal Energy Trading, Trend Trading, as well as options and futures. So we're going to sneak a little bit of just about everything in here over today's talk. All right, fantastic. Good to see you guys on board. Thank you for joining me here today at ReadySetCrypto. So last few weeks, we've talked about ways to increase your stake using options, using price-only tools, things like that. So we've been talking about things like, just a little replay, little review here. We've been talking about things like landing spots when we have a rally that goes parabolic. This is very common to see corrective price action coming into play. This is exactly what it should be doing. So your job is to identify ideal landing spots. And a lot of times they will show up at fib retracements and or things like price pivots, which is like 24,000 price pivot. So pick your spot, set your limit order, and just let it fly. Let it be filled. The lower you go, though, the less likely you will be to get filled, even though it might be a better entry. All right, so that's one way that you can do things. The other way that you can do things is to sell cash secured puts. Hey, Darth, how you doing? Buenos Aires. So cash secured puts is another way to do that. So currently I have a $25,000 short put in play for 26 February. So we've got a little bit less than a month to go, about a month to go for that option to expire. So again, if you've never traded this before, if the price goes higher, my option will expire. If the price goes sideways into expiration, my option will expire. Even if it goes somewhat down from here, my option will still expire. It's only if the price comes all the way down by this date to 25,000 or lower that I will be assigned the number of contracts that I sold. And so, i.e., ergo, ipso facto, I get paid to buy BTC on a pullback. So that's the whole point behind selling cash secured puts. What's the ticker? This is BTC versus the US dollar. Okay, so, and also using price action. We've talked about price action. So if you missed any of the earlier ones, they're up on our YouTube channel. You can scroll back. You can find the live sessions that we've done over the last few weeks. So using price action is always a good deal. And if you get into choppy markets, which we've been lately, you can swing trade by going down in time frame and use your favorite strategy. Okay. Use your favorite strategy. This ticker here is Ethereum versus the US dollar. Okay. Now, here's what I wanted to talk about today, and we'll take questions and answers when I finish pounding you guys with slides here in just a minute. So it's probably only going to take about 15 minutes, and I'll be done with these slides. So something very important has been happening this week in the equity market. So pardon me, I'm going to talk about the equity markets for a minute because they are much, much bigger, and they've been around for a lot longer. And so they generally set the tone for things to come, although to some degree, it's been the opposite of that. So we've had a real David-Goliath battle play out. Hopefully you guys know the fable of David and Goliath, right? So for the first time in my memory, I've been trading professionally for 15 years, and I've been trading on my own for about 10 years before that, not knowing what the hell I was doing. So about 25 years, I've been tangling with markets, and for the very first time that I can recall, traders organized, retail traders organized. They got together, they colluded, and they took down a hedge fund or two recently, which has been awesome, right? I love this. This is, you guys have all heard of GameStop. GameStop has been in the news lately. You can't turn on a TV, you can't open up a web browser without seeing something about GameStop. So it's gone from roughly $10 a share. Today, at one point, it was at 324 or higher. That's the current price was 324, but it was higher than that. It was almost 400. So a lot of people are looking for 1,000. Great. I hope it happens. So what happened? What happened to GameStop? This is huge. What happened to GameStop? Wall Street Bets, so the subreddit Wall Street Bets identified a number of stocks that were heavily shorted. And the thing that was with GameStop was that this is a fund borrowed them to buy them back later. This is called shorting the stock. You can also short the spot if you're trading BTC, things like that. So in this case, the number of short stock shares were actually higher than the number of available shares to buy, which is the float. So this is a very dangerous situation that this fund got themselves into, and Wall Street Bets was right there to help them in their moment of need. So Wall Street Bets organized a mass long event that included long stock, buying long call options, and generated a lot of long demand. All right, way to go, Canadian. So for every call option that a retail trader buys, the market maker is short that call option, thus has to hedge by buying an equivalent number of shares of stock. Let me show you what this means. So if I go out to an option chain, and this is GameStop, and if I want to buy the 29, these are ridiculous prices, by the way. This is an option which is going to expire in 2 days. The at the money option is $9,000, right? You're not fooling anyone. So don't, I think to me, the trade's over. The trade's already over. It's been over for a couple of days now. So if you're not already in it, then I would not enter. But anyway, it's not trading advice. So if you buy to open this call option, the market maker, so this is you. Okay, so I'll just say here's retail, R-E-T, and here's the market maker over here. You're long, he's selling to open, you're buying to open that. He's selling that option to you, so he's short the call. He's short the call option. Or she, could be a she, right? So that market maker being short the call option, they're short a naked call. They're not going to want to be that exposed to that. So they will buy long stock. I'll just put LS here, long stock. So that's what they do. As soon as they fill that position, they'll add long stock to hedge. So imagine all of these guys out here doing BTO, 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 all these call options. All of a sudden you're adding long stock, long stock, long stock. So just the market makers alone are adding stock demand, long stock demand, pushing the price up. This is how the mechanics work of the option market. So with a 100% short position, hedge funds Melvin Capital, seriously, when you have a name like Melvin Capital, you're out of there. And Citron started to notice the price was rising and their short position was falling in value. Uh-oh. So to hedge, they would have had to buy calls or long stock as well too. They can't do long stock because they'd just be buying back their shares from themselves, which they become their own worst enemy to do so. So ultimately they had to fold their hand, the entire position. I think it was something like $2.75 billion by buying back their short shares, which ultimately creates the rise in the shares, right? Creates more demand, lowers the float, does all that stuff. Okay. This is a perfect storm called a short squeeze. Perfect storm called a short squeeze. You guys need to know about these things regardless of what market that you're trading. You got to know about this. Okay. So this is a $10 to $20 stock that has gone as high as $3.80 today. It will probably return to $10 a share eventually. Maybe not overnight, but eventually it'll probably go back down when everybody quits talking about this. Okay, so this is what hedge funds have been doing to retail traders like forever. They've been doing this sort of thing, pushing around retail traders, and all of a sudden what happened is the opposite situation happened. Wall Street Bets got together, and this is the first time I've seen retail organize and punish hedge funds as a target. They literally went after these guys and said, let's go get them. Go get them, boys. So it's a complete paradigm shift since it's usually the other way around. So all sorts of people like myself have been celebrating this today. I think it is fantastic. However, not everybody's been happy about this. Now, don't forget, you guys ever heard of, when sharks get attracted to feeding fish, there's a thing called a feeding frenzy. What happens is, and the sharks are just insane, right? They're just trying to grab anything that they can. And in the process, what will happen is typically one of the sharks will get hit themselves. And then next thing you know, all the other sharks are feeding on this one that's gotten cut, right? It's a feeding frenzy. You just don't know what happens. So guess what? Don't think that all the other hedge funds out there are too pious not to go after these guys as well too. If they see an opportunity to make money, they will go for it. So this is what's happening. We've got a feeding frenzy on these two funds. Now, the old guard is fighting back. So for those of you who might have seen something like this on your broker platform that came in today, right? So I got this little announcement from TD Ameritrade. Well, in the interest of mitigating risk for our company and our clients, we have put in, say, several restrictions on some transactions. So, like, this is bullshit, and everybody knows it. It's bullshit, right? It's the old guard. It's TD Ameritrade trying to protect some of their clients that are out there. And this guy puts it pretty well. Like, when hedge funds and other loot our markets, it's all good because that's what they're used to, right? But when retail traders turn around and destroy a hedge fund, then all of a sudden, oh, we can't have that, right? So it's the old guard is fighting back, and they're not going to go down without a fight. So don't just think that it's all going to be easy, like every stock is going to do this from now on, right? So let's kind of put this all together. What does this all mean? What does this all mean to us going forward? So number one, for the first time, retail traders have found that they can fight back. Yeah, they've been talking about BlackBerry, Bed Bath & Beyond, Palantir. There's like 5 or 6 of them. There's a whole list of ones that are out there. Okay, AMC is another one too. So it's Nokia. Nokia is also one of the ones on the list of their targets. So retail traders have found that they can fight back if they work together. So if they all commit to a community and they don't all, tear each other apart, which is how most online communities handle this, if they're all working together on the same thing, they can actually accomplish some pretty amazing things. They become a huge collective fund themselves. So don't expect hedge funds to continue to be a big fat target, Humpty Dumpty sitting on the wall waiting to get pushed over. They're well capitalized, they are ruthless, and they adapt very quickly. So don't think that this is going to be easy money going forward. Okay? So much of the demand was created through buying options. This means that the retail is starting to match the sophistication and knowledge of funds, and that makes me very, very happy. This also means that it's going to be a stock picker's market going forward. Very much of it, you're going to see things pump, and then you're going to see them dump and go away, and then they're just going to move from thing to thing, right? It's going to be like this. It's not going to be traditional fundamentals. I personally have not traded through traditional fundamentals since 2013, when the Fed really put the hammer down on quantitative easing. It didn't make sense anymore. Everything is price-based. So you guys will ask me at the end in the Q&A, hey, what do you think about this coin and what do you think about that coin? And my answer is always going to be, let's look at the price chart. The price chart will tell us what the market thinks of it. It's not what I care about. It's what the market thinks of it, right? Number 5, hedge funds will have to adapt to survive. All of a sudden, they got a bullseye on their forehead. They've been very obvious to this point. Yes, we are, we're incredibly short this, and they get on their podium and they trumpet the fact that they're short something. Famously, Bill Ackman was short. What was it? Overstock for a long period of time, and took pride in that. I don't think it worked out too well for him, but this is going to be fun to watch the war going forward, to see how this handles, right? So how does this all relate to crypto? Glad you asked that question. So number 1, I see crypto as a more raw version of the equities market. It's not regulated, so we have much less visibility into market metrics. So we're not going to know things like the floats and so forth, and short interest, things like that are tougher to find. We don't have the same tail wags the dog connection between options and the spot. So right now there's a huge effect of options whipping around stock prices based on what the options open interest is and how they're, because of what I just talked about with market makers, right? So we don't really have that yet. There's only just a couple of coins that are optionable right now that you could trade on any options exchange, and just not very deep at that. So tail's not wagging the dog. This means it's harder to spot candidates for this type of thing, and it's harder to initiate that short squeeze. Number 3, crypto has been democratized from the beginning. So this is not something new for crypto. This is the way it was, and I think what's happened is a lot of traders that originally cut their teeth on crypto over the last 4 to 5 years got bored with the bear market and moved over into zero fee trading with Robinhood. And so they're going to seek the opportunity wherever it is. Number 4, most funds are in accumulation mode as well when it comes to crypto, right? They're out there, gimme. They're just grabbing everything that they can, which is why it's more difficult to create a short squeeze with crypto. We don't have a lot of short funds that are out there, and they're well disguised. Okay? So that's kind of what I wanted to talk about today. The last couple of days have been amazing to watch. It's a huge change in the financial markets for me. And to me, when I look at financial markets, I don't see a whole lot of difference between crypto and the stock market and Forex and futures and everything. It's all just one big, it's a big amusement park to me. So I tend to mix them from time to time. So oh my, all right, so time for questions. Before I take questions, I want to just, encourage you guys to join us. Please think about joining us. Join us on one of our platforms. So one of the communities that we're building is for the equity markets. So if you're into trading equity markets, so don't go over there if you just want to talk about crypto. But if you want equities and options, go over to elite.readyset.trade. Join our 10x tribe, and we're doing some great things over there. So it's free. Just join it. We're not going to spam you. It's a great resource for people, like this type of community that we're talking about. We also have ReadySet Vision. So this is very new. This is on-chain analysis, which is the latest state of the art as far as understanding what's happening with crypto. On-chain analysis for crypto, and it's run by our friend Checkmate. So go over to ReadySet.vision. And if you want to join us under ReadySetCrypto with the Omnia service, what we've got here is a quick little sale. If you want to join us for 3 months, so this is a 16% off deal from the street price for our subscription, and you get everything. You get our newsletters, you get our live community, you've got all of our classes. We've got over 20 classes out there for learning to trade crypto, learning to analyze crypto, everything like that. So join us at readysetcrypto.com/3, THREE, 3. That's $199 for 3 months, quarterly subscription, big discount. Okay, so let's get into your questions. All right, the Great Retail Awakening. I love that. Thank you, Canadian Digital Assets. Tyler, is there any kind of future for Digitex? I am not sure about that. Let's separate two things here. I don't know. I personally don't think there's a future for Digitex as an investable asset anymore. I think it was 3 years ago. I think it was a big deal when there was all the speculation. So the Digitex coin, they were trying to get it up to $1, right? So I think it got up as high as 17 or 20 cents and 30 cents or something like that. We went through a lot of spikes and a lot of volatility, a lot of starts and stops, but I think they missed their window on the opportunity for that. Now, as far as Digitex, the exchange, I really like using it. I think it's great. However, I do have a concern that the value of the coin keeps dropping in value. So that tells me that they're doing the same thing as the Fed right now. They're printing everything that they need, which devalues the base currency of it. So that's a concern. I don't know. I mean, it's my favorite interface to trade on right now. I wish them well. I hope they do survive. All right, Manuel, welcome from Romania. Thank you. Let's see. Crypto Darthmark is asking about, I'm assuming that you're talking about looking at BTC. Is BTC going to break 30? Well, so far, every time it's dropped under 30, there's been enough buying orders to pick up on there. There's enough demand. You can see this down here, right under 30. Every time it dips down under 30, which is right around the 50% retracement of this big swing here, that there's enough demand to set this one up. Now, the next level down is probably about here. That's the pivot support at 24,000. So to me, this is the area that's got to hold. I'm not anticipating this going all the way back down to 20,000 again. So all we have is you got to look at things from different time frames. Right now, the weekly chart is exhausted, right? When it goes parabolic like this, you're going to have a hairy back on the chart, parabolic rise, hairy back on the other side. And what I keep telling our Omnia members is probably going to take another 2 to 3 weeks of consolidation before this thing is ready to go. May take even a little bit more than that. That's a hell of a move that we had. And you don't want it to just keep on going. You want it to consolidate. And it's doing so in a declining volume environment, which is also good. All right, let's see. What would you say is the best crypto exchange for trades is? Do you keep funds on exchange? It's so tough right now because it all depends on what country that you're in. So, I would have to look and see what country is available to you. I've just gone very simple. I've gone with VPN for the futures exchange, since Digitex doesn't do KYC, I can trade futures over there. They're not going to bother me. Deribit has told me that I can't trade options with them, so all I can do is a LedgerX account for options. That's it. And my spot trading, I'm just using Coinbase and Coinbase Pro. That's it. So I'm just gone with really simple base stuff. And I just, they're mature technologies now. They work well. So I just use what works, and I use what I'm allowed to use. But there's other ones that are out there that are very good depending on what, obviously if you can trade options, if you're in the EU or, not in the United States or North Korea or something like that, then Deribit's the way to go. All right, let's see. How do you feel about BlockFi, Celsius for stable returns? I am not really Canadian. I am not really a DeFi guy. I'm just a trader guy. I look at price charts and I make. So I'm not really doing the DeFi thing, but that's really Mav's territory. Will this manipulated market revive attention to security tokens and alternative trading systems? I got an opinion on that. There's not one single market that's out there which is not manipulated. There is not one single market that is not manipulated. If you have the cash, if you can push the market around, you will do so. I have not as yet found a hedge fund that was so sacrosanct, as with their little halo on their head to say, no, we have the opportunity, but we're just here to help people. It's not going to happen. When you're talking about money and finance and gains to be made, it's dog eat dog. It's every person for themselves in financial markets. It is ruthless. It is combat. That's what it is. So every financial market that I've ever been part of is manipulated. However, what you have to do is just figure out who's doing the manipulating and trade along with them. That's all there is to it. Okay. Yeah, Nicholas, that was 3 years ago, so I'm not, I haven't followed that. Okay, any last questions? Any last questions here? Anybody else? Doc, do I think the GameStop CEO should announce they are buying BTC? Yeah, probably. The GameStop CEO should probably thank his lucky stars that his stock is being manipulated. So, yeah, we're seeing a lot of the DeFi stocks are starting to do quite well. Like if you look at some of these, they're, look at the focus on these, and these are all really nice looking charts, like AAVE and Maker. Even Maker's been great. Comp, USD, Uni. Look at that. That's a great chart. These things are in accumulation. Oh, the Ethereum fibs. Okay, let's look at Ethereum and let's look at the fibs. To me, Ethereum is more of like in a great big cup with handle pattern. If we go out to Ethereum is in a great big, let's pull this together. So this is a, massive cup pattern. And so we should expect a lot of shake and bake at this area. We should expect a lot of consolidation at this area. Notice that the volume is going up, and now it's tailing down in consolidation. That's all very good. So that's got about a 1,300 point upside target past the neckline of 1,400. So yeah, I wouldn't worry about the fibs for that right now, Darth. All right, Hard Rage. Is crypto adoption by organizations still on uptick, such as BTC by PayPal? Yes, absolutely. This is one of the things that has driven this current market is, like the Stripes of the world, the PayPals of the world are going to start taking, or starting to take that, and it's making a huge difference because they have to accumulate to be able to handle the transactions. Cube, does LedgerX automatically exercise when the strike price hits or when the exercise date is reached. Okay, so let's draw this out. Let's pretend that you have an expiration date here. Expiration date. Okay, and then you're going to have, let's say we sell a strike price down here. Let's say we sell a put at like 25. And the price is wandering all around. Now, in this case, since that's a sold put, the price is out of the money, you're not going to get exercised or assigned or anything like that. So it's all at LedgerX waits until the actual expiration date. So this is a little bit unlike American stocks where you can be early exercised. That doesn't happen at LedgerX. They wait until the expiration date. If the price ends up here above the price for a short put, it'll expire worthless. But if it ends up down here, like below 25, then yes, you will be exercised. You will be assigned the equivalent number of BTC versus the contracts that you sold. Okay. Anybody else? Okay. Going once, going twice. Thank you everybody for attending and hanging out with us here today. We try to do these every week for, about half an hour or so. We just talk markets and talk about what comes up and try to get you guys to accumulate more and more and more. Okay, very good. Thanks everybody. You guys take care. Be good, and I'll see you next week.